Well, hi guys. If you're new, welcome to our channel, and please do not forget to hit the subscribe button. For my regular members, thank you for joining again. Now this is the new episode from the series What You Need to Know Prior to Purchasing a home in Canada.
One look and I breathe.
Now, as you guys may already know from my previous videos, if you missed this, please click the link below to watch the video. But we recently purchased, sometime late last November, we recently purchased our home here in Canada. And, there are a number of information that I wish someone, had told me or was available somewhere that I could have read prior. And now I'm here to provide or furnish you with as much information as possible just so you can make an informed decision. Now, we've talked about, in the last episode, we talked about the planning phase. And this series, we're going to talk through the search phase, which is the second phase, critical phase with purchasing. And the search phase essentially involves searching, like actual searching. So for the search phase, what is most important, first and foremost, is that you will need to understand where you are from a financial perspective in terms of, first, finding a bank or a mortgage lender that suits your need. Now, there are two types of mortgage lenders. Could be banks, it could be third-party lenders. In our case, we use the banks, and we find the banks to be more reliable and more consistent. So it's totally up to you, whatever option you want to use, whether it's third party or the bank. So now in that case, you would have to do some research. You'd have to search through mortgage lenders and figure out which option is best for you. Once you figure that out, you'd have to book an appointment, or maybe call them through the phone, or even use an online platform. I know for banks, there's an online portal where you can actually go in and explore a pre-qualification process, or you give them a call, or you go in person. I most prefer in person because you want that, personal relationship, and you want to be able to address any concern or have any questions that you might have answered. Now, fast forward to your meeting with the bank. The very first thing I would advise to do is to, undergo your pre-qualification process. Now, people often use this interchangeably with your mortgage pre-approval process. Now, they are different. Pre-qualification is like the initial process where you work with the bank to sort of figure out where you are from a financial perspective, while pre-approval process is essentially like the deeper version of the pre-qualification, where you get to explore rate locks, and they give you like full-on information around the term, your mortgage term, your principal amount, your monthly payments, and all of that good stuff, right? And of course, they run the credit check. So my guidance would be, and we didn't know this, we actually just went in full on with the pre-approval process, but we needed to figure out sort of where we were, or where we could potentially land once the bank has, fully assessed where we are from a financial perspective. Now, to be pre-qualified or to get your pre-approval, there are a number of documentations that are needed. One is, if you are purchasing your house with your partner, or your husband or your spouse or anything, they would need to see the combined income in your household. Now, if it's a solo purchase, then obviously they would need your income, or whoever is purchasing their income. The other thing they need is your current employment letter. That just validates, who you're working with, how long you've worked for. It helps them sort of figure out, your length of work. It's also important that you have a full-time job at the time of application. It just gives them a sense of, comfort and, of course, less risk. Another thing that they would ask for is your current address and probably your previous address. They would also need to, so for those who probably are self-employed, or maybe you're an entrepreneur or something, they would need your notice of assessment. Maybe the most recent, and maybe past 2 years, NOA. So it differs, right, from bank to bank. And by the way, this process is purely referencing banks because that's the experience that we had. We haven't had experience with third-party mortgage lending, so that would be sort of another conversation. So this is with reference to leveraging banks as a mortgage lender. So on the pre-qualification process there, I've mentioned your employment letter, I've mentioned your combined income, I've mentioned, you know, if you guys are self-employed, then you need your NOA, your notice of assessment. As I was previously talking about sources of verifiable income, you would need, I'd advise employment letter. That's like an easy one to get, but you know, if you don't have that, some banks will accept your bank statement, some will accept pay stubs. But the bank statement has to show, you know, some sort of a deposit, monthly deposit, you know, as a salary, you know, that they can validate that you're actually working and you're receiving salary and stuff. So once that's done, they do the analysis and they run a credit check on your account. You would need also to know where your credit is at. I believe to have a higher chance at getting pre-qualified, you need a good credit score somewhere around, you know, 690, between 690 to like 900. Now on your credit score, simply put, the higher your credit score, the better. Now credit scores are usually from 300 to 900. Now when you're between 300 and 600, that's low or fairly good, but anything above 630 up to 900 is between good, very good, and excellent. So essentially, the higher the better, right? If you're within perhaps 724 to 800, then you know you're at a very higher chance of being pre-approved, right? So just note that the higher the better for your credit score. So that's a huge determining factor. It just shows them that, you know, you seldom default, and you know you're going to be, you know, diligent with your mortgage payment over that period of time. Now, once they've received all the documentation, they've run a credit check to just verify that, you know, you're good. They will then pre-approve you for a certain amount, and that amount essentially is the amount that your principal housing cost should be. Now, my guidance would be that you always try to settle below the principal amount which they've positioned you on based on your finances. By doing that, it gives you like flexibility to be able to afford not just your monthly mortgage payment, but all the other associated costs that they don't necessarily tell you, which we're going to talk about, by the way, that you can comfortably cover for those. And of course, you know, all the other, you know, hidden costs, as I would call them, that would come up at closing. So, for instance, if you're pre-approved for $1 million, which means you cannot purchase anywhere above that, and even if so, maybe you're giving a room between 1 million and 200k, let's say, but nothing above that, my suggestion or my guidance or my recommendation would be try to aim for something lower, maybe from 900 950k downwards. So that gives you a buffer of about 50k that you can use to cover unexpected costs or additional associated costs, right? So that way you're comfortable and you're not struggling. Right, so for us, we actually went a little above our pre-approved cost, so that I would advise not to. However, that depends on the condition of the market, because for us at the time where we were house hunting, price of houses were on the high. It was crazy. Competition was crazy. Interest rates were up. So we had no option because we had preset mind on what we wanted to have as our first home, and we had the must-haves, the nice to have, and the, you know, we can definitely do without. So for the must-haves, we were overpriced. Like, the houses were priced at way above 1 million, so we had to basically cancel out some stuff and do away with some stuff. But you know, if I were to do this over again, I would be like, you know what, I will keep the principal at a very minimal level, even though I still need to take into account the must-haves. However, like for instance, an example of must-have for us was, oh, it had to be like a minimum of 3 bedrooms. Like, if it's not a 3-bedroom and up, we're not up for it. We needed a minimum of 2 bathrooms. Like, you'd see some 3-bedroom houses with just 1 bathroom. Like, how do you guys do that? I don't know. Like, we can't be trying to go to work and we're waiting for someone to finish from the bathroom for the other person to, I mean, no. So that was another deal breaker. Another one was, you know, just a fairly new house, like between 0 to like 5 years was something we were really keen on, just from a maintenance perspective, because obviously the older the house, the more, you know, cost with maintenance. For instance, you would need to replace the furnace, because furnace needs to be replaced every 10 to 15 years. Now look at this, if you're buying a house that's 12 to 15 years old, then it means you're most likely going to be replacing the furnace pretty soon, and furnace actually costs a lot, somewhere between like 15 to 20 grand, and child, you don't want to be spending that just right after you just purchased the house. So all of these things you need to take into account. So that's hint number 3. Okay. Yeah, and there's a whole lot of other things that I would just, you know, leave out from this that we considered was a must-have, and finding a house within that price point that fit our must-haves was difficult. So we were bound to definitely go above our pre-approved price. Now, for you, I would say, you know, do your market survey. You know, in the previous episode, I talked about, you know, in the planning phase, we talked about doing the market survey, like really understanding what options are available in the market and at what price points, and then you make your decision. So once you're pre-approved, one other recommendation is ensure that your rate is locked. Hear me once more. Ensure that your rate is locked. Okay? I've seen scenarios, I mean, from people's experiences. I know some of my friends who have purchased houses and they've been caught in this whole interest rate brouhaha. And essentially they were pre-approved and they didn't get the rates locked. Now, you're pre-approved, I think, for a period of somewhere between 90 to 120 days, depending on the institution you use. And within those 90 to 120 days, you're expected to find your house. Now, within those 90 to 120 days, the interest rates could spike in either direction, high or low, right? So without a rate lock, it means you're at the mercy of the market rates. And with the current situation, we all know that interests are going so high, you don't want to be caught in that web. So this friend of mine actually was caught in that web where she initially had the interest rate at, let's say, assumption, right? Or example, 2%. And at a point where she eventually found a house somewhere around, 100 days, the rate was at about 6%. Now, she had to purchase her house at 4% more than was already budgeted for. So you don't want that to be your lock. So again, ensure that your rates are locked. Now, if she had locked her rate at the 2%, irrespective of when she closed within the 120 days time frame, she would have still gotten that interest rate of 2%. Right? Cool, right? Okay, thank me later. Now, that's another tip. Now, once your rate is locked, the next thing and you've been pre-approved, the next thing you need to do, and most importantly, is to figure out your agent. Now, it's totally up to you if you want to work with an agent, but I highly recommend that you do, because they make the work a lot easier. they already have the relationships, in the market. They're realtors, right? They're usually assigned to, big real estate agencies, right? Who already have the networks, who have the visibility into houses even before they get into the market. So that could be an advantage for you, right? So another research has to be done in terms of finding the right agency or the right real estate company that you want to leverage, right? And then they would assign you to an agent who would work with you in terms of identifying houses within the options that you have shared with them. They would arrange a viewing, and once you viewed and maybe you're interested and you want to put in an offer, they would also help arrange the paperwork and all of that stuff. Now, one quick hint is when you're working with an agent, at the point of putting in an offer, there's usually a contractual agreement in terms of, that is binding, where it suggests that you will be working with them for a certain period of time. Now, be sure to read that, because most of y'all don't like to read. You better read. So make sure you read the contract document, figure out the timeline that the agent is given for, that's binding for you guys to work together. Now, if it's 3 months, it means you cannot work with another agent within that 3-month time frame, right? Good. Now, if you're not comfortable with it, feel free to have a conversation with the agent. But essentially, if you do not sign that document, then it's nothing binding, which means you can actually use as much agents as possible as you want. However, once you signed that paper, which most agents I find includes that when they're actually trying to put in an offer. Some people even do it before you start to engage. So depends, right? But ensure that you read it, you're well informed, and you're comfortable with the timelines that are given. Some people have a very long timelines. I've seen some people who have 8 months, which is so weird, but yeah. So if you sign for 3 months, just ensure that within the pre-approval period, it means that you're bound to one agent. Okay, so that's that on the agency side. But ensure that you find a good agent, because it's as important as having the right agent with you that would give you, good tips, that would give you good suggestions, and would really be selfless enough to put you first versus themselves. And I know what I'm saying, right? Those who are willing to give you the truth and help you, give you all the information that you need, versus those who are just interested in the commission, let's make the splits and then call it a day. So we were lucky to have had a super fantastic agent that worked with us throughout our journey, from getting our rental home to actually purchasing. It's been awesome. Like, it even went personal, where you could see that she was really intentional about us finding the right home versus she just closing, or he just closing and getting their commission. So it was really lovely to have, we were fortunate to have somebody who really knows the onions and really guided us in the right path. So that's really important. Another search you need to do is search for legal representation. Yes. I know some of y'all get scared when I talk legal, but yes, that is extremely important, because you cannot close a home without the legal team. Okay, so you do the right research. You can ask for recommendations from some of your friends who might have purchased in time past, or even talk to your agent. She might also have a fleet of legal companies or professionals that they regularly work with, that they can recommend, and it's totally up to you to decide who you want to work with. Now, on the legal side, and we're going to talk about that much later, there are also costs associated with that. There's also, we actually went through multiple legal guides before we actually landed on the one that we used eventually, because some of them, they get too busy for you, and it's difficult to even get them to answer certain questions or get clarity and stuff. So once we saw that it was so difficult reaching out to them, we're like, nah, we need somebody who's really into representing us. So we had to pivot, and we found, luckily, a legal representative who was really great, and really helped us through the process and ensured that we understood everything, that we dotted our I's and crossed our T's, and we were not having any form of liability whatsoever. So legal representation is super important, right? Okay, now once you've figured out your legal representation and whatnot, it's now time for you to go into the market. So once you've told your agent what you're looking for from a house perspective, whether it's a townhouse, a semi-detached, a detached, a bungalow, a self-owned compound, whatever it is, they will then put in within their database or fleets of housing the criteria of houses that you're looking for, and they would suggest to you and share a link with you where you can actually view virtually. Now, if you would want, and it's a time-saving mechanism, like I don't want to see like 10,000 houses before I decide, okay, this is the one I want. So it's basically like that pre-qualification process where you're viewing the pictures. It could even be videos. Some have 3D renditions and you can see them, and if it's something that you like, you can then ask her or him to book a visit for you at a convenient time for both of you, and you go to view. That helps with reducing something we call the buyer's fatigue, because child, that thing is gonna hit you, and it's gonna hit you hard. For us, our experience was man, and I was pregnant at the time, so it was just so much for me. Like I was juggling work, and after work having to view like multiple houses within a time frame just so it doesn't get dark. And you know, so imagine anytime from 5:30 to 7 or 8 we were just out there viewing from one place to another. It was hectic, so we definitely felt the buyer's fatigue. And within the first, second, and almost towards the third month, in fact halfway through the third month, we weren't finding anything that fit our description. We had to pivot. Initially we wanted one particular location or city, we didn't want anywhere else. But in the second month we had to like expand our search horizon to the neighboring city. We explored that, and the third month we had to expand even further. So where we are currently wasn't even our initial location, but you know, we're super happy by it. So you might at some point need to expand your location, you know, to allow you find something close to what you're looking for. Now, I should say that it's so difficult to find exactly what you're looking for. Some people, 1 in maybe 10 get lucky and they find more than what they were looking for, but that seldom happens. Okay, so realistically, don't just have high expectations, right? Definitely have your must-haves, and when you find something that is quite close to your must-haves, please go for it, guys. Please go for it, because the competition out there, like finding a house is not even the hard part. The hard part is putting in the offer and doing the whole bidding and negotiation and all of that good stuff. That's when so yeah, once you view the house and assuming you've identified a house that you really want and you want to put in an offer, ensure that your agent gets on it quite quickly, because the earlier the better. Like it so happened that most of the houses that we wanted, at the time we put in an offer, it was already like they've already accepted an offer from someone else, or it was an open bid where we probably bid it out, or some people came back and said, oh, all the offers they received weren't up to par, and so they discontinued, you know, with the housing, putting out the housing for sale and all of that. That was really disappointing. So you go through a lot of these things. Some people might reach back at you, say, hey, you're like top 2 and you need to like square up to be considered for accepting. So at that point you need to consider a lot of things. Do you want to increase? So in your initial asking, now this is another point, my recommendation would be always go a little lower than your deal breaker price. For instance, if your deal breaker price is $850, let your initial asking price be somewhere around $800. Now, you don't want to price too low that will knock you off the initial screening process. You want to still be somewhere closer to the initial asking price. Now, if the asking price is, let's say, $850 and your budget is $850, I would recommend pricing somewhere around maybe $820, $825, just somewhere close, right? Leaving you some room for negotiations, right? Because if you go in high, they're most likely going to come back to you and be like, hey, can you top it up? If not, we're going to accept another offer, and they give you maybe 24 hours to get back to them, right? So you want to negotiate better. So go in at a price that's not your deal breaker, but not also far away from the asking price, if that makes sense. And when you do that, and when they get back to you to maybe do something, another thing you can do again when you've considered your down payment is to potentially increase your down payment. Now, the more cash upfront they receive, the more likelihood for you to get accepted. Okay, thank me later. Yep. Right, so in our case, we initially put forward a certain percentage, and they came back and was like, hey, we're like strong contenders, and you know, we need to do something for us to get accepted. Now, this is for this home that we're currently in. And we're like, okay, what can we do? And then we bumped the down payment a little higher than normal. So that was, you know, tempting or attractive. And we also increased the offer price a little higher by somewhere around 10 to 15K. So that kept us at a competitive edge. And yeah, we eventually got accepted. So from experience is put your best foot forward and just, you know, hope and pray, right? And once you've received feedback, whether it's a rejection, whether it's a discontinuation, or whether it's a, you know, like once you receive something, maybe the owner could come back and be like, oh, I'm not selling, or it could come back and be like, oh, it's set to somebody else, or it could come back and be like, hey, you've been rejected. My dear, move on to the next. You ain't got time. Remember, your pre-approval process is within a certain time frame, and you need to find your house within a certain time frame so you don't have to go through another credit approval process, because that impacts your credit score. So final tip, guys, is ensure that within your pre-approved timeline you've been able to get a house. Now, if you haven't for some reason, then maybe leave some time before going back in for another pre-approval. Okay. All right, so I believe I've covered everything on the search phase. So obviously search is, you know, keep at it. What I've learned the hard way through our experience is at the edge of giving up comes your breakthrough. So ensure that you keep going, keep fighting till the very last minute. Even if it's the day to the end of your pre-approval, keep searching for the home, keep putting in those offers, and once it hits, it hits. And you know, the expectation is that once you've put in an offer and it's been accepted, you'd be giving a certain period of time, I think 24 hours if I'm not mistaken, to make the down payment. So that you need to arrange with your bank, ensure that, you know, that's done quite speedily, and you have to follow, you know, all the rules that they've given with regards to making that payment. Once that's done, they will then put out the contract agreements for you to sign. Once that's done, you'll then have to then work with your bank on getting the final price approved, getting your term approved, getting everything, like all the paperwork that needs to be done, getting that finalized. And then that document will then have to be sent directly to your legal representative. Now, the information of your legal person would need to be given to your bank by you, and then your bank would sort of transfer all that information to your legal person, who will then open a case for you and start processing your stuff and representing you, of course. So please look out for the next episode, which is the closing phase. Definitely more tips coming, but you know, if you have specific questions or you need clarity in some of the areas that I've talked about, please do well to leave a comment below, and I'll ensure that I get to them quite swiftly. Thank you for watching, and I'll catch you on the next episode. Bye now.
Day reminder, you are absolutely capable of creating the life you can't stop thinking about. Stop living in your head. Stop doubting yourself. It's time to make your dreams happen.
Pretty much a year into moving into Canada.
Day reminder, you are absolutely capable of creating the life you can't stop thinking about. Stop living in your head. Stop doubting yourself. It's time to make your dreams happen.
You're thinking of purchasing in the future, or you're already in
Day reminder, you are absolutely capable of creating the life you can't stop thinking about. Stop living in your head. Stop doubting yourself. It's time to make your dreams happen.
And if you subscribed already, Thank you very much.
And a reminder,
And I look
you are
forward
absolutely
to
capable of creating the
engaging
life
guys,
you can't stop thinking
and I hope
about.
you guys enjoy
Stop living in